Welcome to the Wyckoff Crypto discussion. I am Alessio Rutigliano, and as usual, today we will explore the crypto market through the lens of the Wyckoff method. This is our third episode. Thank you very much for your feedback. Feel free to leave your comment below. If you have any trading idea or question, we will be more than happy to discuss it. This information is for educational purpose only, and this is not an investment recommendation. Please stop the video and read the disclaimer. As usual, our special guest is Roman Bogomazov. Roman, are you ready for another crypto discussion today?
Looking forward to it, Alessio, and welcome back, everybody.
So I would start with a quick review of the context of the market in the last 3 weeks. After a massive bull run in stocks, led by the Nasdaq index, the day of our first Wyckoff crypto discussion, we have seen a significant change of behavior. This reaction was warning us that institutions have sold at least a part of their positions in the growth stocks, and now they are looking for other opportunities in the market. And this selling has caused a correction in the whole market. We have seen the impact on crypto assets too, and we are still in the middle of this consolidation. So the message here for today is that we are not out of the woods yet. And in the last episode of the crypto discussion, at point 1 on Bitcoin, we have said that a decrease of volume after the climatic action was suggesting at least an attempt to rally to the level of the local resistance. Low supply always suggests a rally, at least a technical rally. And we have had that rally on Bitcoin, and we have at least temporarily committed above the level of the local resistance. The last 3 bars have selling tails on increasing volume, suggesting that selling is still present. Now we need to test the level of the resistance. So every time we see a commitment above a resistance, we want to see the ability of price to stay above that level for several closes. If Bitcoin is able to reside on this level with low volume downbars, that would be a successful retest. If Bitcoin fails here, we expect at least to revisit the demand trend line. The DeFi index is showing short-term weakness, and we are in reactionary mode, but look at the volume there. It's very, very low. If we have a successful reversal bar right there, that would be a constructive sign, suggesting that after that massive profit taking, supply is gradually being absorbed. But we need buyers to show themselves and prove that demand is there. Until that moment, we are still in reactionary mode, and we can potentially spring the support. And we need to explore this formation on the intraday level. But before that, Roman, your view.
Yeah, so with the Bitcoin, as Alessio was saying, a huge change of character. So this has become a zone where we kind of have to see what kind of price action we're going to have. On the DeFi, it's a little bit better defined in terms of how the change of character is not necessarily a part of the previous formation, whereas with Bitcoin, we're kind of looking at this trading range here. So what does it mean? I mean, like, we're going into a different environment. That means that we just basically are supposed to be here around these levels. And this is where price could fluctuate. We are not necessarily could sustain the trend. We could have this scenario where we kind of go into the trading range and we are breaking the trend. So let's just be cautious about this. A break here, what does it mean? Are we staying in the trading range, or are we actually reacting more to the downside? I think that's kind of the biggest question for me right now. And it's kind of interesting to see how the market correlates with the crypto market and how one drives another. So obviously some profit taken as we have had a lot of gains since March 23rd low in the markets and March 16 low in the cryptos. It was going to be very interesting to see what kind of volatility of the trading range we're going to have. I think Alessio went really well through the short-term scenarios. So up and down until a break, either to the downside or continuation of the trading range throughout.
Here we have a quick look to the crypto sectors, and basically just look at the comparative strength. Bitcoin is showing some kind of comparative strength on the last rally, but if you look at the exchange index, we can see that the selling wave was less aggressive and was followed by a very quick and aggressive recovery. And now we are just consolidating above the top of the range. And I think this is a very interesting spot. Of course, there's a lot of supply on the last reaction, and we have to see. Supply needs to be tested. While the small cap index and DeFi index are the weakest index right now. And we have to see this, all these indexes one by one on the 4-hour chart. What are your thoughts, Roman?
Yeah, I was just starting with the small caps and DeFi. I mean, clearly a trading range environment. So this is where we are right now. This is where we reside. We just go up, go down, go up, go down. So therefore, think about the strategies that you should have here, right? What are those? Those are definitely not swing trading strategies, not long-term investment strategies. These are more short-term, getting in, getting out really quickly, and basically trading. And the point about the comparative analysis is extremely important. So I'm glad that Alessio brought our attention to that. We definitely want to see what's outperforming at certain points of time, and we'll look at other assets in the crypto world, and we'll show you the ones that are performing even better. But still, you have to take note of what's performing well and what's not performing well for the future future positions. All right, what's next, Alessio?
So here we see Bitcoin in a very detailed way. This is the 4-hour chart, and I think that this should be the chart for intraday traders that want to analyze the current market. So basically, we see this huge change of character out of the formation, followed by this recovery right now. The point is that look at that huge supply bar in the middle of the chart. We're just in the middle of that range. So supply is emerging on the top, right on the top of that bar. And that is a very critical level. So Bitcoin was able to commit above the local resistance, but now volume is emerging right there. And it's a very important level of commitment. So I personally don't like that increase of volume. I think that we should see some kind of testing action to see if supply is really present here or not. What's your view on that, Roman?
Yeah, so looks like, again, and we've discussed this before, a potential sign of weakness. What is the sign of weakness? It's a change of behavior on the way down. So we're no longer on the reactions behaving the same way as we did before, where we have a reaction, we stop. We have a reaction, we stop. We have a reaction, we stop at the support. Here we break to the downside. So this is a significant event. And we definitely want to see the recovery out of that event. Testing, And it just seems to me that this is just more about supply being lower. So we are rallying. And as Alicia has said, around this area, because the volume signature has increased, we are seeing some selling into. So whenever we see selling, it doesn't necessarily equate right away to a bearish outlook. We really need to see how the price is going to either hold or fail. So where is the failure here? Well, failure is going to be just below the point of the resistance, and that failure would suggest that at the minimum, if the price comes back below the resistance, at the minimum, we're going to retest the 10,000 support or so, and that could be a possibility. And then we would be thinking, could this possibly be a local upthrust or maybe a much larger lost point of supply? Or in the bullish scenario, we just holding around these levels and we kind of consolidating before we go up. So these are the two scenarios that I would be looking at and just questioning, what the market is going to bring to us. All right, let's go to the next one, DeFi.
Yes, DeFi Index is even weaker compared to Bitcoin. We see the huge bull run that was very, very speculative. Then quick selling, institutions are selling and all the gains are lost, basically. And what we see here after this big reaction, an initial rally, which is quite aggressive on decreasing volume, but we fail on the level of the resistance. And after this failure, look at this reaction. We have very big downspread bars on low volume. So basically, this trading range is telling us that there is no demand for now, and we need to revisit very important level of the support at 2000. I think that will be a very strategical support. What are your thoughts, Roman?
Yeah, definitely weaker than the Bitcoin, even though it was a leadership right here. So, and it's not uncommon to see in speculative issues, assets, to see that outperformance on the way up, and then very, very quick, aggressive profit taking on the way down, where the strength becomes the weakness. And then also, like in Bitcoin in the current position, I like really this spot. So an upthrust, the definition of the upthrust is a temporary commitment above the point of the resistance and then almost instant comeback below it into the trading range. There is a little bit of, some positive action here. So the largest bar is off the top, and then we kind of see how the spread starts to diminish. I wonder if this level right here is going to hold. And if it does, then if we have a higher low, we probably still would be thinking this is a trading range environment until we actually overcome significantly the resistance. But otherwise, we might stay here for a while, or another scenario we just kind of like fallen. Again, with the trading ranges, it's probably the most challenging environment that you could potentially be in, the trading range consolidation, rather than an uptrend or a downtrend. Uptrends or downtrends are clearly defined. You know exactly what to do. You know that you're gonna sell at around overbought condition, you're gonna buy at around oversold condition. With the trading ranges, seems to be the same principle, right? Overbought, oversold. But then, just there is much more fluctuation in between, and that's what produces, the difficulty in trading those. All right, what about the small cap?
It's very, very similar to the DeFi Index. So we see a big change of character out of the consolidation. And now we are forming another trading range just on the bottom. And I think that if we see on the left side of this chart, the level of the support, we are right on that level. And I think that this is very important because we need to consolidate in this area before going up or down. There's a lot of demand on that level. So now I think that we just take advantage of speculative opportunities on the intraday, on the top and on the bottom of this trading range. But the story is always the same.
Mm-hmm. So the bias right now is to the downside. I mean, like this is where we are. Lower highs, lower lows. Also, when we look at the volume signature right here, and we would compare it to the previous instances where the price actually exhibited some profit taken and then went into the trading range, we kind of see that both volatility has increased in the most current range, which is definitely more bearish than bullish. So therefore, we might be thinking that the bias here could be bearish as well. And then obviously the volume signature itself increased, so suggests that supply has increased. So we have this kind of synchronicity between the effort, the increase in the volume signature, and the result, the ability of the price to go down really quickly. So therefore, I'd say if you are an intraday trader or even a swing trader, you have to treat this still as a bearish bias until it reverses and changes the behavior. What would be that change? Again, as we've said before, some overcoming of the resistance, overcoming of this aggressive selling, or at least, has the ability not to go down. That would be bullish. Anything else, any other type of scenario that we look at where we are just breaking down, trying to rally, breaking down again, that still will be within the confines of the downtrend.
Great.
All right.
This is OKEx coin. It's part of the exchange sector. And this is one of the strongest coin right now. And look at the comparative strength with Bitcoin. Basically, on this chart, we see that big reaction that was affecting Bitcoin lately is just creating a high low in the structure right there. And it's followed by a very aggressive rally that commits above local resistance. And right now we see a reaction with a lot of supply, and this reaction needs to be tested. So we have to think in terms of tactics and strategies, because in the long term, if the market is going to recover, this could be one of the strongest coin out there. But right now, we are still in the reactionary mode. And when you are in the reactionary mode, you don't trade to the long side. You wait for a reversal of the market condition. What are your thoughts on this strategy, Roman?
Yeah, I like this strategy. I mean, like, whenever we are in the reactionary mode overall for the market, you have to look at the assets that are not going down. So it means that they're not being sold by institutions, and therefore they are holding on to those in expectation that the price will advance. Once the market recovers, either it goes into the trading range or it recovers completely and goes back into an uptrend. These are the assets that might advance most because institutions that were out of the positions and coming back into the market, they're going to look at what outperforms, what was holding better. And, they're going to use the same type of logic and they're going to jump on those. So this is potential candidates for our watch list. Now, we are in some kind of sign of strength upthrust situation here. And this is always a very interesting, intellectual dilemma here in the markets. How do we resolve this? Well, you have a very big bar right here that has a lot of volume signature. So you want to make sure that the price is not falling back below this target zone. If it does, then most likely we're just going to revisit. But the most bullish scenario here is just consolidating above this big resistance and then resuming the course when the market stabilizes.
Same story on the next asset, Binance Coin. And basically, it's very similar. the OKEx coin that we have seen previously. But I think that the most interesting story here is on this line that I traced, because we are above the level of the resistance. There's a lot of supply there. There's a lot of supply, but look at the last down bar. The supply signature is decreasing. So basically, we need to see a test of this level. We want to see a price inability of price to commit below the level of resistance, and maybe a trading range that forms right here. And this is very similar to what's going on with the S&P in the market.
I would agree with this. It looks like this acts as a climactic stopping action. And it's very important to recognize the stopping action through the price and also volume signature. So look at this volume spike and look at this volume spike. Both are stopping actions. One's in for the downtrend, the one is for the uptrend. And I really like this analog from Alessio about the S&P and the way how it overcame the all-time high, and now it's produced a change of behavior. We still have to see whether there's going to be a continuation in the market to the downside. But the idea here is that we're committing to the upside, and the question is, are we going to be able to hold on to the majority of the gains here? I think also the worst case scenario that could happen for this particular coin is that we would negate all of the gains from the last low. This would be highly negative.
This is Leo, another cryptocurrency in the exchange sector. So basically, we are picking all the coins in the exchange sector. This is showing some kind of relative strength, comparative strength. And we have reviewed this asset last week, and basically now we are trying to spring the level of the resistance that I have highlighted with the dotted line. And I think this is a very important level, because if this cryptocurrency is able to commit above the level of the resistance of this local range, that could be a nice buy. But we have to see. The supply is decreasing since the beginning of the chart. And I think that this cryptocurrency is very peculiar because we see a lot of absorption on the way down. This is basically the principle behind this Leo chart. A lot of absorption on the way down, then we see an established uptrend. The level of supply are very, very low, and now a potential spring. What are your thoughts on this chart?
Yeah, I'm thinking that we should be careful here because what we're seeing at the beginning of this chart is a huge volume signature. So what do? What do institutions do, or the big players? They just basically sell. And then after that, it seems like there is some buying that comes into the market, and it's all this. And please note how much less buying we have compared to the previous instance where the volume signature is very high. So there are fewer market participants in these assets than there were at the beginning of the chart. So therefore, once they bought, what are they going to do? They're not going to do anything. They're just going to hold, and they're going to be inactive. And if they are inactive, then the volume signature is going to naturally go down. So with the naturally low volume signature, it's very easy to identify any distributional signs, because the volume signature with the distributional signs is going to increase, at least to the levels, that we've seen before. And then the price has to follow, obviously. So therefore, when we look at the most recent picture where the volume is so inactive, I would, thinking about the trading range, I would just do some kind of, bar by bar analysis. So break to the downside, but there is still some buying, so there's some hidden demand behind it. There is an attempt to rally. Another bar another attempt to rally but failure, so we are expecting a continuation of the reaction to the support. The price goes down to the support on the next bar, and yet it recovers really quickly into the close, into the same level, and that happens on the lower demand signature. So therefore, interestingly, short-term bullish with the idea that we might consolidate. We do first move up, then move down, but not a lot of supply. That suggests a rally, and here's this rally. So the key here is just going to be overcoming this level right here, this resistance cluster. And it's positive that the price went up so much and covered almost the whole move down. But I wouldn't be surprised if we're gonna, consolidate here more before, trying to attempt to overcome it. But again, a very interesting asset, at least at this juncture.
Yes, and every time we see some kind of absorption on the way down, like in the previous chart on Leo, I always want to see good demand on the way up. So absorption on the way up, some good bar with good volume that proves that buyers are absorbing supply on the way up. So we need to see a lot of level of confirmation to be broken. That's the point.
Yeah, you kind of like pushed me into this idea. Another way of thinking about this particular bar, because it happens at the support and it potentially is a part of the reversal, is to go and to analog other points of the recovery in the trading range. And you kind of see how the close of this bar is somewhat higher. It starts at the higher level, and it has behind it, somewhat of a significant relative to those two bars volume signatures. So looks a little bit more bullish than in the previous two instances.
And this is yearn.finance, and this is a very interesting chart because YFI was the leader of the crypto sector in the last few months. And basically what we see here is a huge trading range. We see a failure of that $40,000 value, and it's just unbelievable. And now basically I like the idea of a big trading range that could be even an apex formation. And why I'm talking about an apex formation right here, because we see a huge automatic reaction on decreasing volume. Look at that volume signature right there. See just some demand on the 17,000 level, decreasing supply, a very aggressive rally. And this is what was like the biggest rally in the crypto market this week, and then this failure. And price is still declining on reacting on decreasing supply. There's not a lot of supply, but we still want to see good demand on the bottom of this formation. Yeah, so I like the idea of the apex formation, but of course we have to see. But by the way, for intraday traders, I think that there is an opportunity here because the range of this, the height of this trading range is very big, so there's some profit to be made.
Yeah, I like the idea of the intraday trade in this type of charts, just because, well, it didn't continue above the previous high. It committed temporarily and then came back. And also, please note the texture of the decline. Compare this this top information to the previous top information, and you could see how there is a little bit more volatility to the downside than in the previous instance. So I wonder if we're just gonna keep failing, and retest the 20,000 here, and kind of like as Alessia suggested and alluded to, a much larger trading range. So intraday trading makes a lot of sense here.
Now the final chart, Polkadot. this is the only cryptocurrency in the DeFi sector that is showing some kind of strength. So this is very important because we always want to know what assets are showing comparative strength, especially if the market have a good has a good reversal to the upside. But there is also a bearish scenario that we can see right here, which is basically a failure against this level of resistance that would bring us back to the bottom of the range. So this is a very interesting chart, and I'm just waiting. I want to see if this cryptocurrency is able to stay at this level and continue the uptrend, or if we fell back to the bottom of the range.
Yeah, this is probably the most, or one of the most bullish charts that we've seen today. Everything is under pressure. Everything is in either short-term downtrend, reactionary modes, trading ranges, and so on and so forth. So definitely a lot of strength here. We don't see any distributional volume signatures just lately. And plus, whenever we start the trading range with the change of behavior, we kind of want to observe what kind of supply is coming in. Obviously, supply is increasing here relative to what we've seen before that change of behavior, but we also could compare it to other analogs where a change of behavior meant something else, meant a different bias. Instead of holding, it actually suggested a downward bias. So please note that volume signature and then compare it to what we've seen just recently. What does it mean? Well, not a lot of selling, so there is more possibility that the price will hold. But I do like Alessio's scenario here that we might actually retest the lows. Why? Well, climactic action, automatic reaction, secondary test. We are concluding phase A, and currently we're in phase B where there is a lot of cause building, there is a lot of supply and demand, wars going on, what's going to win, supply or demand. So I wouldn't be surprised if, we have some kind of retest. And this retest for the strongest assets should show the timing for the whole market, for the low, if this is indeed, a bullish bias and the strongest asset. So I wonder if this scenario is going to unfold, but if not, and if we are overcoming the resistance, this is going to be a point where a lot of the traders are going to be attracted to Polkadot just on the comparative basis, and there might be some kind of attempt to accelerate the price from here. The key is going to be in the volume if the breakout happens. What kind of volume we have? Are we going to have this type of a volume spike on the breakout? And if we do, would it contain some supply that is going to stop the price from moving further up again? So, Alessio, I guess, with this last chart, my impression of the crypto world right now is that there is definitely a lot of weakness that crypto assets have exhibited. There is a lot of testing consolidation that is going on. It seems like the most profitable strategies right now are short-term oriented intraday strategies. And then also, it's important for us to note all of the assets that are outperforming right now or that are actually lagging. Your final thoughts?
Yes, that's basically my strategy right now. I'm very, very short-term oriented, but also looking some kind of long-term comparative strength. And we have also to keep in mind that this market is very fast. So basically, almost twice a week, I always look for some kind of comparative strength, long-term formations. So you can do you can apply all these strategies at the same time. And that's it for today.
All right, sounds great. Thank you so much for watching. Thank you for your feedback, and we'll see you next week.
Bye-bye.